What if I told you that right now, you're probably making the same investment mistakes that keep 67% of Americans from ever achieving financial freedom? The truth about building wealth isn't what most people think, and today, I'm going to share the insights that took me years to discover. Let's start with a surprising fact. If you had invested just $100 monthly in the stock market over the past 30 years, you'd have over $180,000 today. Yet most people don't take advantage of this powerful wealth-building tool. Why? Because they're caught up in common misconceptions about money and investing. The first thing you need to understand is that wealth building isn't about getting rich quick. It's about making smart, consistent decisions over time. Think of it like planting a garden. You don't expect a seed to become a tree overnight, but with proper care and patience, it grows into something magnificent. The stock market has historically returned about 10% annually on average, but that's not the whole story. When you factor in inflation, which typically runs about 3% per year, your real return is closer to 7%. This is still powerful enough to transform your financial future, especially when combined with the magic of compound interest. Speaking of compound interest, Einstein allegedly called it the eighth wonder of the world. Here's why. When you invest, you don't just earn returns on your initial investment, you earn returns on your returns. This creates a snowball effect that accelerates over time. The longer your money compounds, the more dramatic the results become. But here's where most people go wrong. They try to time the market, jumping in when they think stocks are low, and jumping out when they think they're high. Research shows this strategy fails consistently. The most successful investors are often those who simply buy and hold quality investments for the long term. This brings us to diversification, your best defense against market volatility. Think of it as not putting all your eggs in one basket. A well-diversified portfolio typically includes stocks, bonds, and other assets spread across different sectors and geographical regions. This helps protect your wealth when certain markets or sectors underperform. Many people believe they need a lot of money to start investing. This is another myth that keeps them from building wealth. Today, you can start investing with as little as $5 through various investment apps and platforms. The key is to start early and remain consistent, regardless of the amount. Index funds have revolutionized investing for the average person. Instead of trying to pick individual stocks, you can buy a piece of hundreds or thousands of companies in a single transaction. This provides instant diversification and historically has outperformed most actively managed funds. Understanding risk is crucial in investing. Many people avoid the stock market because they see it as too risky, but they don't realize that keeping all their money in cash is also risky. Inflation steadily erodes the purchasing power of cash, meaning you lose money in real terms year after year. The power of dollar cost averaging can't be overstated. By investing a fixed amount regularly, regardless of market conditions, you naturally buy more shares when prices are low and fewer when they're high. This strategy removes emotion from investing and has proven effective over time. Let's talk about fees, because they can silently eat away at your returns. A 1% difference in fees might seem small, but over 30 years, it could cost you hundreds of thousands of dollars. This is why low-cost index funds have become increasingly popular among savvy investors. Real estate is another powerful wealth-building tool, but it doesn't always mean buying physical property. Real estate investment trusts, REITs, allow you to invest in real estate without the hassle of being a landlord, providing both diversification and potential income through dividends. One often overlooked aspect of investing is tax efficiency. Using tax-advantaged accounts like 401(k)s and IRAs can significantly boost your long-term returns. The government essentially gives you a discount on your investments through tax benefits, yet many people don't maximize these opportunities. The biggest enemy of successful investing isn't market volatility, it's your own behavior. Fear and greed can drive poor decision-making, causing you to buy high and sell low. The most successful investors understand this and develop strategies to manage their emotions. Remember, building wealth is a marathon, not a sprint. The most reliable path to financial freedom isn't through getting lucky with a hot stock tip or cryptocurrency speculation. It's through consistent, disciplined investing over time, taking advantage of compound interest, and staying the course during market turbulence. The financial industry often makes investing seem more complicated than it needs to be. The truth is, a simple, well-diversified portfolio of low-cost index funds, regularly contributed to over time, can outperform most complex investment strategies. Sometimes the best investment strategy is the simplest one.